Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that little pullback on the chart that we were looking for yesterday. Of course, yesterday I was saying that I was a little bit more biased to the downside. As you can see, we have had about a 3% drop on BTC since that statement. And we are currently bouncing off of the bottom of that rising wedge that we were taking a look at, where if we do lose the bottom of that wedge, somewhere around under that 86,400 now, of course, this is a rising line. So yesterday it was 86,300, but anything underneath that general area is probably going to result in a breakdown that, even if there is a little bit of a wobble in price underneath there, would likely to continue down to that 81 to, let's just say, a 78K area, depending on how bearish the sentiment is at the time. The more shallow it is, the more likely we are to just continue with the potential for a breakout on this. Really, this is actually a bullish pattern here that we have, guys. This is a broadening descending wedge. And again, as soon as you find that floor on these patterns and you start putting in those squeezes, oftentimes you get a breakout that can just bullishly take you back up to your highs. Okay, like there's a certain math that goes along with that, but in general, we can say something like that. Now, the movement here would be in a line with our diagonal if we do get that breakout, if we do get that bust up, and then we're going to have to make sure that we take out that diagonal if we do want a continuation to our critical zones, where maybe we see that 120 and higher levels. Until then, we do have to understand that this pattern, right, no matter how bullish it is here, will really take us into an old resistance, which is dynamically increasing in price, but technically is still there on the charts. And so any rejection in these areas, right, especially that deviates back into this lower range, is going to be considered a lower high. It's going to be an extended head and shoulders pattern, which can then take us back down once again to our critical lows, and maybe even significantly lower. Perhaps that would be the rejection that took us to that 68 to 75K area. And then we'll have to play it by ear from there. Now, guys, we're not there yet, so we don't really have to be overly concerned with that. Currently, we are in a little bit of a bullish trend, and if we do get one of those rare 30% breakouts to the upside on these rising wedges, which have a 70% chance of breaking to the downside, then that would constitute our breakout. And even if we come back into the wedge, breaking down from that wedge would probably just be a bullish retest of this bullish pattern. And to be honest, I'm just going to see that as essentially forming an inverted head and shoulders here, which does again have a measured move up to our diagonal resistance, right? Now, I was pretty clear that that 90 to 93K area was super critical for us to hold on to for continued bullishness in this bull run, and that anything underneath that 90 to 93K area was going to be too rich for my blood until we end up putting in a bottoming structure. We are currently in the process of forming a bottoming structure, and really the last step that we want to see is that breakout and then the higher low, right? And then if you're super conservative, you can wait to actually validate above that, but it's getting a little bit long in the tooth there, right? No risk, no reward, as they say. Guys, until then, until we get that breakout, we are still in danger of this bearish pattern, right? This is related to bear flags, to bear pennants, right? A rising wedge is related to those bearish patterns. So we are still in danger with a 70% likelihood of breaking down in the coming days. And again, that would be a rejected, 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 rejected. Once again, are we going to get rejected at this diagonal as sentiment continues to be bearish, as tariffs continue to increase in the market. Now, on April 2nd, right, there is going to be the quote-unquote Liberation Day by Trump. It's a little bit of a joke because that's when tariff taxes double for all of us, and that's not a good thing. Markets are not going to like the doubling of their taxes. So we really do need to get that breakout before April 2nd. And if we come into April 2nd on a breakout, then maybe it's going to be that Liberation Day, double taxation day, let's call it, that brings us back to our maybe our mid levels. And if we can hold those mid levels because the market digest those taxes, and they can kind of predict their cost, maybe they need a week or something to think about it. But again, we're going to be looking to come back up, creating some type of a neckline here. And that would be that head and shoulders, right? That inverted head and shoulders that maybe, that maybe takes us back to this, maybe even the highs of our overhead range. And again, I'm going to be looking for a possible rejection anywhere between somewhere around that 98 to 106 area. And of course, anything above our previous highs here, above 109, 110, is going to suggest continuation, maybe into that 120 area. But until then, we are on high alert that this diagonal could end up being a dead cat bounce that brings us significantly lower. Right? Since we did breach my 90 to 93K area here, since we did break down from my rising wedge at the top of the market, those are the two warnings that I gave you where, this market starts getting considerably pricier in terms of risk. And unless we get that breakout, we really haven't validated anything to the upside, even though we do have a little bit of bullishness here. We had a little bit of bullishness here. We had a little bit of bullishness here. In fact, we had a little bit of bullishness here, but they all resulted in breakdowns. And until we change this pattern, until we start doing something different, really, we can't say that the nature of the market here has changed. And even if we do get that breakout, we still have to be aware that there could be a dead cat bounce, right? And that this may have been that 95K top that I predicted in 2023, almost 2 years ago, where I was predicting that the top of the market would be somewhere around that 95K area, possibly with a deviation. And while I was optimistic, as long as we were above those 90s, that we could have an overthrow of significantly higher levels, maybe even to 150K in my most optimistic projection, as long as we are underneath that 90 to 93K area, all of that is out the window. And only until we get above this diagonal do I start looking for those types of targets again. And that target, that diagonal is rising. So we do have to be aware that this could be some kind of shenanigans here on the chart where we end up putting in just an extended head and shoulders, which then takes us deeper in the charts. Okay, guys, that's your alpha for the day. I am still optimistic that we might get this breakout here. It's looking interesting, okay? But just understand that anything underneath that 84,500, anything underneath that 85,000 is looking like another rejection, and you can kind of front run that under 86,400. Above 89,000, it's looking like we're getting that breakout, guys, okay? So that's your alpha for the day. Stay safe and happy trading.